Last week was amazing. Is this week going to be any different? Are we going to see the AI story fading a little bit? Does the inflation picture, the more benign inflation picture, give us a more positive risk-on kind of momentum? What do you think?
I think, if you take the realms of equities, I think AI is obviously going to be incredibly dominant. We saw from the price action last Friday that once again it's these IT stocks, these communication services stocks, which are slumping. And I think the thing for the market is how much can the rest of the broader tape, offset things. We're negative year to date for Nasdaq and S&P 500, and I've been arguing for a while that if the big large cap companies can't contribute to the rally, there's only so much the US stocks can do. And I think people are looking elsewhere, looking towards Europe, they're looking to South Korea. But I think the thing is, though, at some point, these are still, good companies. And I think when they start screening in valuations and becoming more attractive, that will put a floor into how far we can go. But I think the real fear in the market is that anything that is AI adjacent or, related to that field is in the firing line. We've seen some of these, asset management companies, these software companies, which is getting attacked. So for now, I think people are just going to park in areas which aren't as exposed to those factors.
And how AI adjacent is Europe? Is it seen as sort of an alternative in this side, just not touching it quite as much? And of course, thinking about kind of the space of Europe and the sort of buy Europe trade, is that really something that you think is gaining traction with investors?
Well, I think, the thing for Europe is what's been its weakness for the past few years is now actually playing to its strengths. It doesn't have this really solid IT sector. So if you're looking to diverse away from some of these AI plays, then Europe is actually a pretty good place at the moment. It's got financials, which are performing really well. It's got industrials. It's seeing all this increased EU spending. So the story for the EU is very different to the US. And, if you take things like the dollar, people are trying to reduce dollar exposure, then, Europe is a good avenue for people to look at.
There is I keep hearing this view, though, that if we see the US go down, if you diversify into the rest of the world's going to be just fine. Because if tech goes down in the States, the rest of the world will be okay. Korea will be amazing because we've still got this DRAM story, this high bandwidth memory story going on. But is that true? If US equity markets go down from here, isn't it just isn't the kind of the Europe, the diversification, just a relative trade? Everything goes down if the US equity market goes down. Is that right or is that wrong?
I think to some extent there will obviously be some element of contagion, but I think that, from a broader macro perspective, this is a relatively positive global growth environment.
Right.
So, even though we have seen a dovish pricing for the Fed, US growth is still good. And looking outside of the US, global growth expectations are relatively high. This is a nice cyclical environment to be in at the moment. So I do think that will contain some of the contagion. And also, if these AI companies can become more responsible with their spending, then it can shake out some of the weak hands, some of the weaker players.
Yeah.
And, this can, we still can see global equities deliver significant returns, even if the US lags.
Well, Adam Litton, thank you so much for joining us this morning, for your take on the markets and everything that we're watching going into this week.